Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 1 p.m. and 7 p.m. Eastern Standard Time. Just a quick reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Imagine this. In 1791, the United States passed the first Bank of the United States Act, giving private bankers and government officials control over the nation's currency. At that time, most people didn't realize it, but this single act shaped American finance for decades. Today, a modern parallel is unfolding. A single bill in Congress, the Clarity Act, could force Ripple to restructure tens of billions of XRP, reshaping the entire ecosystem almost overnight. I know it sounds technical, almost boring at first, but just like the Bank of the United States, the effects could be profound, structural, and long-lasting. And if you're invested in XRP, this isn't a hypothetical scenario. It could affect real holdings, ladies and gentlemen, real markets, and real institutional flows. Today, we'll walk through the 20% test, explore what it could mean for Ripple, and why this is bigger than just numbers. It's about power, control, and the architecture of modern finance. As always, ladies and gentlemen, thank you to everyone who supports the channel. Liking the video, subscribing, and commenting really does make a difference, and I love answering everyone's comments, and I think everybody in our fast-growing community learns from all the comments. With that said, let's break this down, ladies and gentlemen. What is the 20% test, you might be asking? At the heart of the Clarity Act is a framework lawmakers call a mature blockchain system. One of the key thresholds is the 20% test. Let me be very clear. This is not about retail investors or random wallets. This is about insiders, founders, executives, affiliates, and anyone directly connected to Ripple. Think of it like the Venetian Republic centuries ago. Wealth and influence were connected and concentrated in a small, elite council that controlled the city. The Clarity Act is trying to prevent a modern version of this in crypto, a small group holding too much sway over a ledger. Here's where it gets real, ladies and gentlemen. As of January 2026, Ripple has about 34.2 billion XRP in escrow. Ripple itself holds 4.5 to 5 billion XRP outside of escrow. Key insiders like Chris Larson reportedly hold 2 billion XRP, plus executives Brad Garlinghouse, Monica Long, and early affiliates. When you add this together, we're talking about 40 billion XRP under direct or contractual control. To put it in perspective, that's almost half the total value of all gold held in private vaults globally. That's why the 20% test is no mirror technically. It's a spotlight on concentration of power in the XRP ecosystem. I want to be upfront with everyone here, ladies and gentlemen. I'm not a congressional lawyer. I'm simply analyzing public documents and summaries and running the numbers. If the bill passes in this form, Ripple will have to prove that insiders and affiliates collectively control less than 20% of outstanding XRP. And that's where the real drama begins, ladies and gentlemen. Let's talk about the options Ripple faces. If the bill passes, Ripple faces several strategic paths, each with its own story. Option 1, maintain current escrow throttle. Ripple could continue unlocking 1 billion XRP per month. We're using 60 to 80% for liquidity and corporate purposes. This is the slow and steady approach, predictable, low disruption, and regulatory friendly. But is it enough to satisfy the 20% insider cap? I personally doubt it, ladies and gentlemen. Option 2, aggressive re-escrow. Picture the Great Fire of London in 1666. Citizens rebuilt with fireproof bricks and wider streets to prevent another disaster. Similarly, Ripple could re-escrow or extend escrow timelines, tightening circulation to show regulators deliberate control over supply. It's defensive, proactive, and strategic, ladies and gentlemen. Option 3, voluntary burns. This is the nuclear option for them. Burning XRP to reduce insider holdings is irreversible, like the radical wealth redistribution of the French Revolution. Tens of billions destroyed could reshape perceived control, but it could also have unpredictable legal and economic consequences. I personally don't see this as likely, but it remains on the table. Option 4, structural institutional distribution. Ripple could allocate XRP into ETFs, institutional custody products, or long-term liquidity programs. This is similar to the Marshall Plan after World War II, resources placed strategically to stabilize and grow the system. The tokens aren't gone, they're safely parked, which could reduce perceived insider concentration and regulatory eyes. Or, option 5, third-party or public escrow. Ripple could move holdings into multi-signature or government-supervised escrow, fueling speculation about institutional or sovereign involvement. Imagine if some of this XRP is already committed to central banks or supranational entities. Disclosure alone could shift the narrative overnight, much like early gold reserve announcements shaped global trust in currency. I want to talk about the global regulatory situation. Meanwhile, Ripple isn't waiting for U.S. clarity. In Dubai, RLUSD has just received official recognition from the DFSA. Only 3 stablecoins are recognized: USDC, EURC, and RLUSD. This is huge and massive. It's reminiscent of the gold standard era. Only recognized, trusted currencies could operate in international trade. Now, DIFC, banks, exchanges, and institutions can use RLUSD for payments, settlements, and treasury operations, integrating it across Ripple's full stack: payments, custody, and tokenization. The outcome? XRP's bridge liquidity becomes far more valuable. Exclusion of algorithmic and crypto-backed stablecoins naturally directs institutions towards compliant, fiat-backed options like RLUSD, ladies and gentlemen. The tighter the regulatory framework, the stronger XRP's role as a bridge asset becomes. I want to talk for a second about U.S. institutional adoption. Back in the U.S., institutions are moving faster than retail could imagine. Morgan Stanley and BlackRock are rolling out crypto ETFs, targeting high-net-worth clients first. They aren't following hype, ladies and gentlemen. They're building infrastructure and liquidity corridors for real money flows. Early signals are clear. Spot XRP ETFs are absorbing millions daily. XRP leads relative volume growth even in red markets, which is spectacular. Infrastructure adoption precedes retail speculation. Just like NASDAQ early high-frequency trading adoption fundamentally changed markets in the 1980s. XRP is transforming from speculative asset to functioning rail right in front of our eyes. And these flows show the system is starting to move. I want to talk about financial architecture analogies here for a second. Here's the bigger picture, ladies and gentlemen. No single ledger can handle all global finance efficiently. Ripple's version mirrors the Roman Empire's road system. Specialized routes connecting economic hubs instead of funneling everything through a single city. Low value, high frequency transactions are offloaded efficiently. Multiple ledgers communicate without framing liquidity. XRP serves as a bridge asset, moving value reliably across the ecosystem. When you combine Dubai's stablecoin framework, U.S. institutional ETFs, and Clarity Act's 20% test, you see the construction of a multi-ledger, interoperable global financial system, with XRP at the center. So here's a strategic question for Ripple. What will Ripple do if the Clarity Act passes? Burning tens of billions is irreversible and extreme. Maintaining the status quo may fail if escrow counts towards insider holdings. More realistic paths: aggressive re-escrow, structured institutional allocation, or legal redefinition of affiliate holdings. Ripple has likely been preparing for this scenario for years. Some tokens may already be allocated to quasi-sovereign entities. Think central banks holding gold to stabilize national currency. Every escrow schedule, disclosure, and release is a carefully planned move. Well, ladies and gentlemen, if you made it this far, I appreciate you very much. So today we're going to get the update and today's daily financial combat update from the financial combat battlefield. And we're going to go over some of the topics that were said in each other video. So this will be a framing of an evolutionary story that's revolving around current events as at least we see it And this is just our opinion, not financial advice, and as the world is breaking. So first, yesterday, we spoke about Hong Kong and Shanghai gold clearing corridor. What's happening? Hong Kong and the Shanghai Gold Exchange are establishing a cross-border gold clearing system. This goes beyond simple trading efficiencies, ladies and gentlemen. It allows gold to function as collateral for repo and funding structures. Remember what we said yesterday? If someone wants to build a road now, they can use gold as collateral. They don't have to use treasuries. This effectively embeds into balance sheets high-quality liquid asset. That's what HQLA stands for, high-quality liquid asset. Ladies and gentlemen, why this matters? This is a strategic pivot towards metals-based financial infrastructure within a multipolar system. Gold is no longer just a traded commodity, ladies and gentlemen. It's becoming a functional collateral for financing projects, including infrastructure, without relying on U.S. treasuries. Ladies and gentlemen, this is part of the broader BRICS plan discussed since May, okay? 2025, building vault infrastructure, enabling cross-border collateral emerging, repo markets, and alternative financing for global development. The goal right here is to create a parallel financial ecosystem that's going to reduce dependence on the dollar and Western-dominated capital markets. It's so big what's happening, and again, it's almost like everybody's glued to seeing what's said in Davos. Again, I told you yesterday, I don't pay attention to that. It's no mind. I only paid attention to what the gentleman who runs NVIDIA said. He spoke about energy, and we told you that the AI situation conflict is a conflict and competition, a kilowatt battle over energy, simply put, okay? Because to me, it's a lot of people talking, and it just changes like the wind blowing. Number two, India and the BRICS CBDC interoperability. What's happening? India's central bank is proposing to link BRICS central bank digital currencies, CBDCs, for cross-border trade and tourism payments. Why this matters, you're asking? While the stated goal is efficiency and smoother settlements, the subtext is a settlement-coordinated push against stablecoins and U.S. dollar dominance. That's why every inroad that can happen, the Clarity Act, as far as we're concerned, has to happen, is very, very important, okay? So if you look at this cultural framing, India and other BRICS nations present CBDCs as stability protecting, figure that, while framing stablecoins as risk-prone and undermining monetary control. Ladies and gentlemen, this messaging resonates domestically because these populations trust their own government more than they trust U.S. policy, okay? So for the West, this looks like a subtle challenger. For the East, it's presented as protection and modernization. So let that sink in for a second. They don't trust the U.S. government. So this is big, that you don't hear this anywhere in legacy media. You said yesterday, 3, China's platinum and palladium futures exchange. Okay. What's happening? The GFEX has launched platinum and palladium futures, building domestic price discovery and hedging mechanisms. Implications for gold markets. This challenges CME dominance in these metals. CME's products are largely foreign sourced, Russia, Latin America, and they've been historically neglected. So Russia has a near monopoly on palladium, which has previously stifled the U.S. futures market. The new GFEX contracts shift influence and trading volumes towards China, which is massive, with volumes already rivaling CME since November 2025. So here's a strategic angle. The GFEX may initially be speculative, but its existence signals a structural competitor to CME and reflects China's broader ambitions, creating domestic infrastructure for strategic metals and financing markets, reducing reliance on Western exchanges. Okay. I'm going to rope this in, you see where XRP, and we also spoke about HBAR yesterday. These are critical attacks and assaults on the Western dollar system, okay? I could write a thesis on this, right? But more importantly, I always tell you, we're the remora swimming underneath the sharks, enjoying all the sushi that's getting cut up right now. I know everyone is really disappointed in price action of XRP and everything else right now. I get it, right? But I'm going to tie this all in and give you a macro angle and a long-term angle, because what we stress, and we've been stressing our Patreon and our signal services about accumulation when we don't think it's safe to be scalping or day trading, because the news can move everything, all right? What's very interesting, right? And stay with me. I always tell everybody here to pay attention to the Asian Open, right? Well, what do we see in Shanghai? What did we see in Shanghai last night? The moment that the news about the tariffs going away and no more future tariffs, it's almost like gold, copper, and silver got the message before because they sold off massively and hard. Okay, so after they sold off, we see the price drop like this, but then we almost see an anchor because in Shanghai, the physical demand for the metals stops the price from going any lower. It acts almost like an anchor, or like a bungee. It stops, it drops here, then comes back up. So the paper selling that may come from London and New York can only go so far down before the physical demand that's coming out of Shanghai requires it. So it's almost, looking at it from a trading perspective, and this is not trading advice, you can see when people have consolidated investment products, whether it's ETFs, EFPs, where the actual selling and price action of a commodity or derivative that's derived in these ETFs or EFPs can push the price of an asset down, that's in our eyes, it's almost like another version of manipulation of price trading. It's very interesting when you look at this, right? So again, the paper regime sells. The Shanghai regime needs physical. It stops it from going, right? So these are bought into, and until this goes all the way down and actually cracks, be very interested to see who buys in the silver market and the metal and the gold and everything like that, all right? I'm going to tie this again into XRP. People ask me all the time, are ETFs better than physical custody? My answer, ladies and gentlemen, physical custody is more important always. It just is. Again, you physically own it, not your keys, not your crypto. Okay, that's important. The same, if you really want exposure to some of these assets, we believe physical custody is more important. But why we're talking about this right now is, if you look at price action, right, it's almost the powers that be. Maybe they're getting, and again, this is just speculation. Think about this for a second. I want to hear in the comments right now. You tell me, do you think the big banks are hearing what's going to happen first before the news geopolitically changes everything? So if they'd been selling the metals, they're short, and we were saying there's a big short squeeze on silver coming out of some of the massive banks that we call category killers. I'm not going to mention them by names. Do you think that they know what's coming ahead of time? The trading desks, in some shape or fashion, so they can prepare for this, right? It wouldn't be outlandish if they did, so they can push the price down as much as they can, right? Putting pain on everyone, but then the physical demand in Shanghai pulls it back up. It doesn't seem so interesting, right? Or crude. So you could have them doing the selling. You could have ETFs and EFPs doing the selling. You could have a whole host of characters doing the selling. So let's take a step back now and go right back to XRP. And we're also talking about HBAR yesterday. If all the ETFs coming in right now are absorbing all the liquidity, right, and exchange volumes of these tokens is shrinking, that gives them control of the price action. If it gives them control of the major price action because they don't operate as retail or a meme coin anymore, what is that telling you? Read between the lines. What's that telling you? What's it telling you? It's telling us a lot. It really, really is. What that's telling me is that this is no longer a day trader market. This is no longer a retail-driven market. I told you that once ETFs come out and the institutional bad boys get in there, you are no longer in the kiddie section of the pool, ladies and gentlemen. You're now in the Mariana Trenches, right? You're coming to the areas where we swim around in and what we see every day. And believe me, it's a lot different of a game where we're swimming around every day, because the people who we control assets for, these people don't take any prisoners, and failure is not an option for them. So it's not like, oh yeah, gee, sorry, we made a mistake and you just lost a few yards. It don't work like that. So everybody works in some form of orchestrated natural order of things, almost like a school of fish swimming. I use a lot of analogies because I'm trying to break down complex things for everybody to digest. And I'm so happy reading everyone's comments. I think we'll tone down some of the rants here because I think it's too much for everyone to digest, but I want to get this out here for everybody to see, right? So again, it's not too far-fetched to think that the major banks who are on the CME and the London paper selling regime have information before it's going to break about policies to stop certain things. I can't prove that. It's speculation. It wouldn't be far-fetched. And when I talk about, wealth consolidated in different financial structures, whether it's be ETFs, EFPs, that can actually push down prices, again, that's like the second shock, advance of trying to push something lower. But the physical demand needs it. Something else I want to throw in right now, ladies and gentlemen, we believe, it's just a hunch, that the silver and copper markets are now intertwined. Okay? I'm going to be going over all this in our Patreon later today. Thank you, everyone who's joining in the Patreon. Welcome all the new members to our membership channel. If you're looking for an edge, come and join us in the Patreon to take your financial journey up another level. We believe now that silver and copper are intertwined. I believe that all, and this is my personal belief, and what we're telling anybody that retains any capacity, all the silver above ground is spoken for. Spoken for. Okay? The big argument now is for what's below ground. Okay? That's the big argument. Ladies and gentlemen, if anybody, I cut my teeth in the mining industry in Papua New Guinea. Very special place, considering my grandfather fought in every major battle under General MacArthur in the South Pacific, every amphibious assault landing he made until it was part of the Adventures of Bataan when he was wounded at the bottom of Mount Pinatubo, where he was given his last rites. So the Philippines as well, to me, is a very special place. That's why everywhere in Asia, in the South Pacific, these islands, I walked around, and concessions, everything had a very special meaning for me, because I looked around and I wondered what all those young men thought about on both sides, about what was going on, about why their lives were so badly interrupted. So to me, I thought about that, right? But I cut my teeth there, and I learned everything about mining. And, from my mentor, who's in a better place right now, that most of silver is a byproduct of other mining. So when you see big copper outfits mining, okay, the silver is coming with that too. We believe there's going to be an argument for what's below the ground. And if you still look at silver miners, and why I'm talking about this is because the golds are being used as the shock troops against the Western monetary system right now. The hoarding, the consolidation, keeping it in place, and now trying to use it as settlement, trying to use it as collateral. Before you were ever going to do major development projects all over the world, countries would use treasuries as collateral, okay? You'd get a letter of credit. You'd get something derived from the treasuries to build. You can use gold right now, so that takes some of the demand away from the treasury market. It takes some of the demand away from the treasury market, okay, into gold, and it puts gold in place. You're looking at Poland right now. They're coming out. They're buying a monster amount of gold. Monster. They're getting in. They're going to have a monster amount of gold, okay? So we believe copper and silver are going to move together now. Now, why I'm saying all this, and back to XRP and HBAR, I'm going to go over more about the copper and silver thing later. Again, they move because it's gone from an industrial situation to now a Goldilocks situation, and that's what's happening, right? Okay, but when you look at, we'll get into that later. Ladies and gentlemen, I've been reading all the news coming out on the wires, the radios, and some of the TV about the most important people, that what they're saying. I'm not going to say names, what I'm paying attention to. I'm in the camp that supports any form of legislation moving us forward is vital, okay? I'm not going to get involved in the arguments between the founders of cryptos, who thinks this is bad or not, okay? As a financial mercenary, ladies and gentlemen, we don't care who's right or wrong. We care about making alpha. I know that sounds shallow, but that's what a financial mercenary is. Again, you work for certain types of people. They want results. They don't question your tactics. They want results. That's all that matters at the end of the day. Keeping this ball moving forward is all that matters. So regulatory conviction and clarity is a must. And I am in that camp that says anything that keeps pushing us forward is good. Ladies and gentlemen, if you're in this space and you're an XRP, you're an HBAR, okay, you're in this for the long run. You're not looking, if you're in this for a month, then you might as well you have a different timeline of what you're doing, respecting levels, waiting, and getting out. But if you're in this for the long term, for where the whole development story is going, you have to stop worrying about, oh, I've been sitting in this for this long and nothing's happened. So what? Why did you get in the first place if it didn't happen tomorrow? This is a patience game. The market will outlast you if you don't have Gucci clarity. If you don't have Gucci clarity, the market will outlast you. And it's very vicious, the market, right? I tell you all along why we are the wolf pack, because we pack up when it's time to put in work, period, okay? That's what you learn on the floor. The mercantile exchange, you pack up, okay? So anything that keeps this bill moving forward is a good thing. I think it gets done. Okay, because there's too much on the lines. And what I believe, when people go to Davos, I believe it's an audition. I believe you're auditioning for people around the world about why your solution is better and why you have the magical solution to the problems. But as the remora, we're swimming underneath them and eating what they eat. And along with the chaos, that's what's going to come. Again, right? We spoke about the Widowmaker trade. Again, if it becomes too expensive for Japanese debt in any shape or fashion, the world is going to have a hangover from all the free money when it gets sucked in. That's what you pay attention coming out of there. The short-term news, people are going to talk about tariffs. Yeah, yes, no, whatever. That kind of evaporates right away. The major story is coming out of Japan always. Again, the Widowmaker. Look it up. Look it up. XRP is the future. HBAR is the future. If we look back at some of the biggest families buying XRP, they understand why. Every sell-off they use as a way to accumulate the XRP for themselves. Big-time families and family offices, people that retain us, ladies and gentlemen, they don't trade the headlines. They hope that there's chaos. They love the chaos. The things I'm regurgitating to you were taught to me from people that work for these families, 100%. So that's what they do. Now, if you're worrying about daily price fluctuations, then your trading goals are very out of whack with the long-term structural way, okay? And then you should get a better trading plan, right? But if you're in this for the long run and you're digging in, okay, and you're digging your foxhole, you're ready, you got to be ready for what's coming. And that's Glucci clarity. Because if not, you're going to get caught up like sushi about price action. Up, down, up, down, up, down, up, down. And again, I don't care who says what or why. I care about moving the ball forward. Because the people who retain me only care about results. They don't want to hear a great story. They want to hear about results. And that's what you want to hear about. So the results, this is the special sauce, what we're cooking. The special sauce right now, seasoning, needs some form of regulatory clarity so that all the money can flow in. But right when I summed this up, what we spoke about, takeaways, a lot of things are changing. And as far as I'm concerned, accumulation when there's blood in the streets, a little at a time, is better. Because the purchasing power of your money inside of a bank is losing power. A Hershey bar today does not cost what a Hershey bar cost in 1950. So as far as I'm concerned, the audition when you go to Davos around the whole world, the biggest banks are already in XRP, ladies and gentlemen. Look at the ecosystem that Ripple has built. It's from a financial nerd like myself and a financial mercenary. It's spectacular. Their catalog of companies underneath their umbrella is flawless. It's ridiculous. It's amazing. It's so Gucci. It's ridiculous. Again, coming from our end of the screen, from what we operate, what markets we're going in and going out, I love this thing. I love what they built. It's phenomenal. Don't let price action shake you out. Don't let negative comments shake you out. I don't go, ladies and gentlemen, this is the only form of social media we use. We are not on Facebook, so if you get a message from someone on Facebook claiming to be us, it's not us. We don't use Twitter. We don't use X. We don't use any of these things. We come here, that's it. That's all we got time for. And we got our Patreon and other groups of who are using us for different reasons that have contracted us, okay? So at the end of the day, what a magnificent time to be involved in this. And don't get shaken out. Remember, dollar dominance is being challenged. So the answer's coming right now, okay? The East versus West narrative. I keep framing this, right? Again, ladies and gentlemen, I can only go through this so much, you know? It's unbelievable what's happening right now, okay? So here's the takeaway I want you to understand. XRP is no longer speculative. It's part of regulated financial infrastructure. Regulation is coming. It will define who controls the rails. Retail may watch, but institutions, regulators, and infrastructures shake the system. Infrastructure shapes the system. Understanding which networks, tokens, and rails survive in tokenized finance is more important than chasing the next meme coin. History repeats itself, ladies and gentlemen. Railroads in the 1800s, central banking in the 1900s. NASDAQ, adoption in the 1980s. The entities building the system shaped the future long before the public catches up. XRP is following the same pattern today. Ladies and gentlemen, we're watching history unfold. The Clarity Act, RLUSD, adoption, XRP, ETF flows. These aren't isolated events. They're converging signals of a new financial architecture. XRP isn't a meme. It is a speculation. It's a bridge in a regulated, interoperable system. Retail can watch, learn, and position themselves, but infrastructure, regulation, and institutions are writing the real story. Ladies and gentlemen, if you made it this far, I really do appreciate you. And like, if you remember growing up eating Italian ices, the candy's always at the bottom. The candy's at the bottom. So if you make it to the end, here's the biggest nuggets. Look, the titans of industry controlled development and infrastructure, always. The railroads, the natural resources. This was all controlled, okay? In our professional opinion, the next evolution of that is in crypto rails. You can either decide that you want to be, and this is part of your own recce, your own research, short-term, medium-term, and long-term. We always advise to have a little of each, okay? That's just what it is. Nobody can pick the top, and nobody can pick the bottom. If you can do that, then God bless you. And like I said, God bless everybody. But at the end of the day, having the chance to be able to participate in this right now is a one-time shot, a one-time deal that you have access to. Human history evolves. The only thing that's constant is change, right? I always told you, Rome wasn't built in a day, but they were laying bricks every night. You got to have the Gucci clarity. The clarity is why you got in this and where the world is going. So to be able to be involved with where the world is going, that's massive. It just is, and as far as we're concerned, you're going to see a lot of these coins converge into some utility cartel that we were talking about to be utilized, right? So when you think about Ripple and XRP, think about XRP, again, the ability, I'm going to do a video on when we used to do certain types of arbitrages that I used to do. And I was taught about how using them can speed up doing trades, right? But again, it's a once in a lifetime opportunity. I know everyone's been in this a long time, and I know everyone's tired, cold, hungry, and they're losing their conviction. Remember what your long-term goals are. If you do that, you'll be all right. Well, ladies and gentlemen, I want to thank you for staying on top of this and tuning in some of your day with us. I want you to understand this isn't just crypto. It's the architecture of the next financial system, okay, being built right now. Thank you for watching. We're going to see you always in the next one. Ladies and gentlemen, your support allows me to keep bringing you these deep dive, high-value insights to the crypto community. If you like this style, please subscribe, make sure your notifications are turned on, and tell me what you think. Do you like more of this style, the videos are a bit longer? Let me know, okay, because I'm trying to consolidate this in for you guys, right? I want you to have a great day. Stay emotionless. Watch XRP closely. This could be a defining moment. This content is for informational entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making an investment decision. Remember, the game is changing, and those who understand it first will benefit most. Make sure you're on the right side of it. You got two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves to never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now be remembered. This is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to Crypto Public. We break down the major global banking trends shaping digital assets today, giving you content, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic. Love you all.